right, Charbel, it's actually business with Laddie Williams today. We had it last week, but good morning, good evening, wherever in the world you might be watching from. It's time to get the stories that set your agendas. Another trading day right here in Lagos, Nigeria. Let's get off with the stories now. Let's take a look at some markets here. We see Chicago soybean futures inch higher today, but remained close to a multi-year low after rains in key suppliers, Brazil and Argentina, suggested that supply will remain plentiful. Corn and wheat prices fell with both markets, being well supplied. The most active soybean contract on the Chicago Board of Trade, SV1, up about 0.1%. If you look at the price there, 0.4% for soybeans at $12.45 in the gray market. For CBOT corn CV1, that's down about 0.2% at $4.45 for half a bushel. So we're seeing shipping analysts say more ships carrying grain were diverted from Suez Canal to routes around the Cape of Good Hope this week after attacks on vessels in the Red Sea. About 7 million metric tons of grain cargoes, normally transit the Suez Canal into the Red Sea, each month. So we're seeing all of that weighing on prices right there in the grains market. Let's get a quick check on the oil market. Now, oil prices climbed today after a drone attack on U.S. forces in Jordan added to worries over supply disruption in the Middle East as Houthi rebels stepped up their attacks on vessels in the Red Sea, hitting a Trafigura-operated fuel tanker there. So we see definitely, when it comes to the oil market, is it a supply disruption or demand concerns that move these prices? $83.84 a barrel, that's what we're having for crude this morning. It's up 0.4%. And we see U.S. WTI crude, $78.35 a barrel. So we're seeing both up. They had a good week, last week, but risk of a widening conflict in the Middle East come at the same time that Russian refined product exports are set to fall, with refineries and a major oil terminal under repair following, drone attacks by Ukraine. So we see the same dynamic there with the oil market and, the grain market. So that's how these markets are looking. We'll keep tracking to see how the market play out this week. To all the stories now. Just like Lagos State, we see Abia State, this time, they have decided, as the Ministry of Environment, to ban the use of styrofoam foils, popularly known as takeaway packs at this point. So the ministry, in a statement signed by the Commissioner for Environment, Philemon Ogbonna, said the use of the product as food containers has been banned in the state this time. He noted that takeaway had earlier been banned in some states, including Lagos. Therefore, advised the public to immediately discontinue the use of foils until investigations are fully carried out. We know Lagos State are given some kind of grace period, about 3 weeks, but we're still definitely tracking that. And we see the European Commission and the African Development Bank Group have formalized a new financial framework, partnership agreement to boost investment in infrastructure projects in Africa. The pact was signed on the sidelines of Italy-Africa Summit. The European Union's contribution to
makes sense for CBN to fill up those positions, considered very valid, and decisions that has a broad perspective from those independent members as well as the non-independent members. So I don't think it's going to be the right thing to do to convene that meeting. But if it's convened and you take any decisions, then is it going to represent the opinion of private sector independent members? To my thinking, I don't think so.
Let's look at the inflation numbers now. We're seeing the inflation for December. If you can put up that slide, the last number we had there was a new high. Definitely, we see food inflation definitely over 30% at this time. And, looking at all of this, definitely there's a lot this MPC committee, have to deal with at this point. Headline inflation, 28.92%. That's for December. Core inflation stands at 23%. Food inflation, 33.93%. Huge move there in December. We also see urban and rural inflation. So talk to me now about what you'd like to see, from this for the first meeting in February. Talk to me about more rate hikes or a hold stance, because at the end of the day, we've been having rate hikes since 2023, but inflation is still skyrocketing. What would you like to see at the next meeting?
I think that we are going into a period that I would call, the toughest challenge the CBN is going to have moving forward is fighting inflation. So we would experience over the next couple of meetings, over the next couple of months by the CBN, an increase, a ramping up of the MPR, if you like. And the reason is because we are experiencing a low growth trend in the economy, as well as a high inflationary trend. Therefore, it's a confluence of two factors that is quite complex that creates a deflationary trend. For CBN to address that, it has to first continue to increase rates. By what measure remains to be seen. Maybe 50 basis points, maybe 1 percentage point, gradually ramp up rates so that you can mop up liquidity. On the other side of the spectrum, the federal spend that is mostly targeted at its operating expenditure also is pushing a lot of liquidity into the system, but not in a productive way. So I think there's going to be a blend of approach, both in terms of the NPR moving up and the spending pattern of the federal government, if you like, and the states too, shifting from expenditure-based, OPEX-based expenses to spending on capital expenditures. Because you spend on capital items, capital projects, building up assets and infrastructure, you create jobs, you motivate the private sector investments, you boost GDP. And that way, even if inflation were to be moderated, it would be a situation where you're creating jobs. All we see right now is inflation trending so high, interest rates being so high, and growth rate not being as much as we'd expected. And of course, also have a high job, employment situation. So that creates a very complex stagflationary situation in the economy.
Right, definitely, that's the much we can take. Thank you so much for coming on, Dr. Chamberlain Pittside, Chairman Excelon Capital Advisors. So sorry, the network didn't allow us, enjoy this conversation like we would have liked to. But definitely next time, Dr. Chamberlain, I'll be having you in the studio, so there won't be any interruptions. Thank you so much for coming on.
Thank you.
Yeah.
Thank you so much.
Dr. Chamberlain is in Port Harcourt, that's why I couldn't join us. Thank you so much. All right, so let's look at definitely January, the month of outlooks for the Nigerian economy. We've had from CIBN, NESG, and most of them, say the economy might grow this way or might not grow that much as expected by, most forecasts that we've seen. But definitely this will form, part of the conversation at the next MPC meeting. The growth projections for the economy, looking at the headwinds such as inflation, currency devaluation. We're seeing Nigerians having to deal with a double whammy of both heavyweights, currency devaluation and inflation at the same time, eating at our pockets at this time. Let's take a look at what the CIBN had to say.
Economic outlooks for the year 2024. The Chartered Institute of Bankers is contributing to the conversation with a tilt to impact on businesses. The experts in related fields are in attendance, but also are the youths. Exposing them to the realities of doing business in Nigeria is the intention.
That this step was necessary.
President of CIBN, Mr. Ken Okpara, joins virtually. He welcomes the panel and other attendees and leaves the floor for discussions. The tone is set by the Director of Monetary Policy at the Central Bank of Nigeria, Dr. Mohammed Tumala, who represented the Deputy Governor Economic Policy. The forecast from the CBN is optimistic for 2024.
The mining, electricity, gas and water supply subsectors amounted to 58, 52, 51, and 69 index points respectively, indicating, of course, a positive trend.
Then the panel takes over. The outlook is not positive for some of the panelists.
If you have a material increase in cost of lending or cost of credit, what you are going to witness is that these sectors, which I have mentioned, that are growing at very slow rates, will not be able to generate the kind of cash flow that will enable them to be able to meet their interest payment obligations and talk less of loan principal repayment. So you're going to have increase in default.
2024 should also be a year to look closely at the gas sector.
Nigeria's potential for gas, value-wise, is greater than what we extract from crude oil. And over decades now, not years, instead of, let me use the word everyone understand, is recapturing the gas, we flare it. And then, of course, we had investment in LNG, as you said. And what we have done so far is expropriate 48% of the capacity, which means we still have unused capacity to start with. Secondly, even what we produce oftentimes, in actual fact, have been budgeted for 25 years.
However, there are strategies for way forward.
People talk about comparative competitiveness. Okay? That's what it should be. Comparative competitiveness. Because comparative advantage is not it anymore.
It's the good and not so good, and the participants have to study both sides for progress.
We are seeing some very good policies, from government. And I think what I will advise is really look at policies that have worked. We have quite a number of policies that have worked and learn from them. Okay, and look at policies that have failed and essentially just drop them.
For CIBN, the success of the event is not enough. Following up for implementation is next.
We need just 1 year.
Doesn't look like a large meeting since some of the participants are joining virtually, but that does not belittle the importance of the subject matter. The Nigerian Economic Summit Group is sharing observations on the performance of the economy in 2023. But it is focusing more on how best to navigate policies and implementation for a better 2024 in the stabilization phase with a projection of 3.5% GDP growth.
This phase then talks about achieving growth, not just about growth, but actualizing our natural resources to drive our collective purpose as a nation. And the first part to start with, it's understanding our natural capital. We are blessed tremendously with our natural capital. If we can achieve this, it will impact our GDP size, it will impact our economic structure, it will impact our employment and our poverty and inequality situations.
Brilliant ideas do not make impact, and the Chief Executive Officer is aware of that.
So the cyclic nature of NESG's activities, the Outlook report, at the beginning of the year, then we jump into the reform execution and monitoring with government. Then we show up in October at the summit to signal where the country is, what we won on, what we lost on. Then we jump back into, again, reform action and execution. That cyclic process, whilst it looks mundane, is part of how you build national conversations that change a country over a generation or more.
And so, for the use of the government and private sector and economists,
these and more are some of the content in the NESG 2024 Macroeconomic Outlook, which also has the Economic Transformation Group.
Thank you, sir. How many persons do you know?
All right, that was the macroeconomic outlook from the NESG. Definitely, it's all about outlooks in January, and we've heard from experts like and heavyweights like Dr. Mr. Bismarck Urani. They've talked about heavy lifting in the first half of 2024 before we start getting some kind of soft landing sometime. But let's look at the markets now. Let's see how it fared last week. We see the all-share index, 102,000 points, over 100K. Big move we've seen in January alone, about over 30% rise for this market. 8.32%, that was the close for the week last week. FT cap there sitting at 56 trillion naira at this point. And the question on most people's minds at this point is, when is the pullback coming? When will this market slow down? We're seeing some quarters actually afraid at this point, thinking, is it time to take profit, or do I still stay in this market? Let's take a look at the trading activity for last week. It was subdued compared to the week before that. We're seeing volume lower, 2.98 billion. That's what was traded in the market. For the value there, was worth 57 billion naira. But still less than the previous week. Deals, 67,962 points. Let's look at the sectoral performance for last week. Now we see banking, again, down 2.36%. We're still seeing profit taking on most of the tier 1 banks and tier 2 banks in that counter. Consumer goods, big 5.29%, but we see the industrial goods, they were the heavyweight of last week, 23.20% to close the week. Oil and gas, 11.57%. Oil and gas no longer unchanged at this time. We're seeing big moves coming from the oil and gas counter. The top trades, Transnational Corp PLC, United Bank for Africa PLC, and Sterling Financial Holdings were the top trades for last week. But trading is on. Definitely right now, and we're going to be getting intraday analysis on Business Incorporated. We're going to know if the market is going to stay above 100,000 for this week. Let's get a brief outlook now for the markets. We see the DMO carrying out an FGM bond auction for 2024. 360 billion naira bond on offer across 3 reopenings today. And for the bond market, analysts at Codros expect the outcome of this month's FGN bond auction holding. That's today. That will influence sentiment in the secondary market. So definitely, we'll get more details on Business Incorporated. I'll hand things over now to the Sunrise team.